Hi, everyone, and welcome to the Friday, January 8th installment of the Silicon Insider, the only uncensored look at life and business in Silicon Valley. My name is Mike Malone, and I've been covering this town longer than anybody. And I'm here with our special contributor, Scott Budman, business and tech reporter for NBC Bay Area. As you'll notice again this week and this year, in honor of the California COVID lockdown, we are creating this podcast from our respective homes on Zoom. Our producer is Jordan Henderson. Our East Coast correspondent is Bob Grove. And our host for this podcast, as always, is the Silicon Valley Business Journal. Hey, so Happy New Year, man.
Thank you, my friend. Good to see you and Happy New Year.
Meet the new year, same as the old year.
Yeah, a lot of the same issues politically and technologically and social, and they're all just coming over with us in 2021.
And Silicon Valley saw a lot of you the last couple of weeks.
Yeah, it's been a busy time. It's interesting. I mean, none of this took the holidays off. None of this took the early sort of honeymoon that we often see in early January.
Yeah.
Just stayed right into it with all the focus right here on Silicon Valley, for better or for worse, both financially and I guess socially, for lack of a better term.
Let me ask you a personal question. Field reporter versus anchor. Give me the differences and which one you like better.
I mean, I like being out in the field just because there's so much variety and, you're talking, normally you're talking to a lot of people. Now, not so much. Now I do a lot of Zooms, but, anchoring is great. Obviously you're sort of running the show, but you're inside, you're made up, you've got wires, you're at a
chair.
Yeah. I mean, I like being out, seeing different companies, meeting different people each day. That's what I do.
Well, okay. I was just curious. We only see you this time of year in the anchor slot. So I was wondering if you were enjoying yourself. I mean, everybody else is having Christmas and you're working Christmas Day.
Somebody's got to do it. No.
Okay. So we got a lot going on. Let's go the obvious one, which is social media and the President of the United States. Okay. So my understanding is President Trump got banned from Twitter, was it? For two tweets, unless he removed them within 24 hours, which he did, so he's back on, but he's still banned from Facebook. Is that correct?
Right. I mean, with Twitter, it was a 12-hour suspension as long as he took some tweets down, which he did. So that was a temporary suspension. Facebook and Instagram the next day said, you are off this platform and cannot post for the remainder of your term.
11 days, 8 days now.
Right.
Yeah.
And then who knows if he's going to have his own personal Facebook or Instagram account. And then others followed. Twitch took him off the platform. It just clearly was one domino after another. Everybody's waiting, I think, for Twitter to do something harsher than just a temporary suspension or the sort of messages that they put below his tweets that say things like the election results are not disputed, Joe Biden is the president. But other than those volleys and the temporary suspension, he's now back on Twitter tweeting again.
I have to say that I've said this all the way through as a First Amendment absolutist. I worry about the precedent being set that these social platforms are deciding what we're going to hear. It bothers me a lot. It goes against the First Amendment. I mean, the notion of free speech, we have to let in speech that makes us really uncomfortable, short of treason. I know companies can do it legally even. I mean, they're allowed to do it. They're private entities. But given their presence in American life, have they moved beyond that to a level where they have certain responsibilities to the Constitution too? Even though they're not the federal government, even though they're not elected officials, they still are part of the United States of America.
Right. But remember, there were no bans or even suspensions up to this point, no matter what the president said.
Right.
And the First Amendment says you can't yell fire in a crowded theater. What a lot of people are saying, even some First Amendment advocates, are that President Trump yelled fire in a crowded theater and said, let's march down there. Let's take care of this business. Let's make sure that those Democrats and even the Republicans who are not recognizing our victory know that we actually won. And they're saying that by inciting the rioting that happened, that goes against the First Amendment protections, and that's why Twitter and Facebook and Instagram are saying, we've got to remove you from the platform, at least temporarily.
Okay. I'm old enough to remember, I'm sure you are even too, young man, but the period between the election and the inauguration was sort of this quiet interregnum where the departing president left quietly and the incoming president laid low, putting together his cabinet and all that. And then everything burst out again at the inauguration and the swearing in. I've never seen anything like this.
No, and
even Bush Gore wasn't this crazy.
Well, because ultimately Gore conceded.
Yeah.
It was not, even when he wasn't conceding and saying, hey, let's count every ballot, it was let's count every ballot, not let's walk to the Capitol en masse and, you know, and let them know how we feel. He wasn't tweeting or whatever the, you know, whatever the version of that was back then, saying we were robbed, there was a steal. There wasn't anything like that. It was let's count the ballots and then ultimately conceding. This has not been anything like that for a single day.
Is this an aberration, or is this the new reality going from here on out?
That's a really good question. I mean, hopefully an aberration, but it hadn't been done, like you said, and now it has. Didn't get the result that Donald Trump wanted. Instead of him winning, he's lost. People are dropping out. They're now calling for him to be removed even before his term is up. So I wouldn't call that a victory by any stretch. And social media companies, his oxygen, the way he reaches out to people, are cutting back on his access. That's another loss. So it didn't go well. So someone in the future might think of that, but they might also think, hey, I kept myself in the news and I kept this election result news.
Right. We have a new president. He hasn't been officially sworn in, but I don't even notice him on TV. This is still Donald Trump era. I mean, the news stations can't leave it alone. They can't walk away from it. I mean, I think there's going to be a decompression, you know, in late January on what everybody's going to cover.
Right. I was doing this story just yesterday on the social media, and someone actually, you know, from where you work at the Markula Center over at Santa Clara University, she's the head of ethics over there in the internet department, and says, what a strange thing when Donald Trump can't tweet, not only because we get our news elsewhere and we can do other things, but reporters get to react to things other than Donald Trump tweets. Yeah. And she had a point. And so, yeah, there will probably be a bit of a decompression, at least in that way.
Okay, so let's talk about the new administration, what we know so far, and its impact on tech and Silicon Valley in particular. I mean, I'm feeling very ambivalent about what lies ahead. On one hand, you have a faction of the Democratic Party that wants to break up big tech because they consider it totalitarian and, you know, too many rich people controlling too many people, too much influence and all of that. On the other side of the Democratic Party, more towards the middle, it's, wait a minute. Tech pays our bills right now. They're paying for these campaigns. Tech won this election, you know, and they are our primary economic force against the rest of the world. That's our play in the world economy. So we've got to bolster tech. So which side wins on this?
You know, it's hard to say. I mean, we've never had Biden as president. But we had him as vice president during 8 years of Barack Obama's presidency, and that was very friendly to technology.
Yeah, they love tech.
Right. Obama is young. He had a young staff. They used technology very well, social media very well. And like I
felt like I saw Air Force One every week flying into the Valley.
Yeah, well, also for fundraising. And that's going to continue. And you're going to have your Elizabeth Warren wing of break this up. And your AOC wing and your Bernie Sanders wing, and you're still going to hear those voices. But I wonder if what you said a little earlier, the economic impact here, we will be coming out of a recession. And right now, the only thing, especially in California, but kind of for the whole country, that's keeping us from a much further recession is that tech companies are doing so well.
Right.
They're doing well obviously, on Wall Street. They're doing well by creating a large tax base. They're doing well by hiring a lot of people, even in the teeth of a recession. I don't think you want to damage that golden goose right now or anytime in the near future. I'd be very surprised.
Well, in the near future, but let me play devil's advocate, which is these giant companies, we can now see it statistically, are beginning to suppress entrepreneurship, startups. And if we're in this for the long game, we need to have a robust entrepreneurial community. We need a lot of new competitors challenging these existing giants. And right now, they've been crushed by the pandemic. If the giant companies are the golden children for government, they love them. So if we suppress entrepreneurship, we may win in the short run, but in the long run, we may lose our ability to compete increasingly.
You're right. I mean, the other drumbeat we've heard, both from the left and the right, is the antitrust drumbeat. And maybe that continues to go forward. You don't lose a company by either breaking it up or just having more regulation when it comes to antitrust. And maybe that's a way to, like you say, spur startup growth by once again encouraging startups and encouraging.
I mean, if you break up Facebook, does it become less competitive? I mean, if you got Instagram over here trying to compete in the marketplace, Facebook over here, we saw IBM get broken up, and it was one of the best things that ever happened to the computer industry. And it really didn't hurt IBM,
Right.
for many years.
No, I mean, and even when you spin off a company, you keep shares of the company, you keep the back and forth going, especially in the Valley. And we've seen that. We've seen chip companies spin off other companies. We're seeing all these SPAC companies now sort of join together and spin things off and go public. And there's vitality in that. And you're right. It is important to keep the startup economy. One of the things that the Silicon Valley will be dealing with in 2021 is trying to keep companies from moving away to places like Miami and Texas. And one of the ways to keep that sort of ecosystem is to remain the place where startups want to be. And you're right, that's very important. They don't want to lose that reputation because we have a few behemoths out here that are sucking all the oxygen out of the startup atmosphere.
Right. Okay. So speaking of making a whole lot of money very fast, our weekly, it seems, for the last year and a half, Elon Musk story. He's now the richest person in the world. And arguably getting pretty close to being the richest person that ever lived, at least not a ruler, not a monarch. But he's worth $220 billion now. He just passed, Bezos.
Yeah, and
is it even possible? Is it completely built on sand? I mean, Tesla's a good company, SpaceX is a good company, but really, its intrinsic value is such that Elon's now worth $120 billion.
Right. The other thing that happened in the last couple of days is Tesla passed Facebook in market value. And, I realize that's symbolic, but Facebook is a company that literally spins out cash every second. They're extremely profitable. Tesla is a company that has been profitable for a few quarters now, but not on anywhere near the scale of Amazon or Facebook or Microsoft or Apple or Google, to name the companies that it's catching up with.
Facebook has 1 billion plus users. Facebook has 1 billion users. How many Tesla customers are there out there?
Well, you don't have to
obviously the products are priced differently.
Right, but you don't have to apples and oranges this. You can apples to apples and say how many cars are out on the road from every car company in the world besides Tesla. Tesla has a minute, tiny fraction of a fraction, and they're worth more than all of those car companies combined.
Combined, yes.
Yeah, I mean, that shows you the optimism around this company, not to mention the fervor and perhaps frothiness around this company.
Yeah, well, I think it's a cool factor too. You kind of want to be connected with the most interesting entrepreneur on earth right now. But
right.
I think people, even if Tesla continues to do well, I think people are going to get burned after a certain point, because this has all got to come down to reality. The bloom is going to have to come off the rose at some point, and you don't want to be the one holding that rose when it happens.
Right. I mean, you never want to do that. Right. There's obviously speculation in this too, and there's a fear of missing out. I mean, you look at some of the crazy speculative investments of our time, and we talk a lot about Bitcoin and housing and stuff like that.
Well, I was going to say, let's talk about crazy speculative investments. Bitcoin.
Yeah.
Broke. What did it break? $40,000
This morning,
week.
41,000.
Fell back to 35, but nevertheless, $40,000 for Bitcoin.
Yeah, I mean, back when it was half that some years ago, people said, well, this is the craziest thing ever. This is tulips, part 2 or whatever. And now it's doubled again. People are just diving into this. And again, it's to me, the original interesting thing about Bitcoin was, wow, will we actually have a new currency, one that can't be tracked by the government, one where you can shop online and do all this stuff sort of anonymously. But it's lost that, because not only is it this crazy speculative investment, but it does move $4,000 and $5,000 a day up and down, which makes the value of it as a currency, to me, all but obsolete. Because again, if I buy something right now and Bitcoin is worth 40, and then later in the day it goes to 35, I'm shocked at how badly I did, but then it maybe goes back up. I mean, it's hard to track.
It's like a Weimar experience with money. I mean, we hold a dollar bill and we're bugged because inflation went up 3% or took away some of its value. But it's a physical thing backed by the United States government. There's gold in Fort Knox. We've kind of detached from that, but nevertheless, it's grounded in something. Bitcoin is floating in the ether. It's in cyberspace. It's bolted to nothing. I mean, it just seems like the ultimate speculation. And I hope people who got rich doing this, because bless them, they figured it out and got on board. But wow.
Yeah, they have gotten rich. And one thing it has in its favor for those investments is that there is a certain amount, a limited amount. But again, we've seen it go from 19,000 to about 3,000 in a very short period of time, without any reason. And then we saw it go from 3,000 to 40,000 with probably the same reason. People jumping out, and they've been jumping in for a little while now. And hopefully they're making some of their money and keeping it, because there's nothing that says this needs to go higher. You talk about Tesla or Elon Musk being wealthy. There's
at least get a car. You get a car out of it with Tesla.
Right. There are a lot of reasons why that makes sense. Bitcoin, it's not yet a currency. It's not really in use other than as an investment, and that makes it risky.
Do you think these large banks and stuff that are suddenly announced they're accepting Bitcoin, do you think that gave enough security to the product that people started going into it saying, well, it must be okay because now, PayPal accepts Bitcoin?
Right. There's a legitimacy to that for both generations. Maybe the older generation is looking at the banks, but the younger generations are looking at Square and PayPal and saying, this is how I move money and keep money and pay my friends. And I can do Bitcoin on these platforms as well. So it actually has gotten that legitimacy to an extent from both generational ways of keeping and transferring wealth.
Okay, let's talk a little bit about the Bay Area. And we've seen a lot of departures recently. I mean, HP Enterprise. Now we got Oracle. That was a stunner. They were up there in the Emerald City and Foster City with those silver towers, and I used to eat lunch. When I was at Forbes, I used to walk over and get their cheap food, which was terrific, in their cafeterias. I mean, that was a real physical company with a lot of presence, and now it's decided to move away. I mean,
their headquarters.
I asked you this a couple of weeks ago before the holidays. Does this augur something, bad for the area?
It does. But this is symbolic. This is about money. The Emerald City will still be there. Every employee that's there now, Oracle has said, if you want to come back when you come back to the Emerald City, you can. This is not packing up a whole bunch of anything, really. And Oracle's big and wealthy. They have offices everywhere. But if they headquarter in Texas, they save a lot of money because California is still a very expensive place to do business. So is there a risk of this happening? Yes. It's not because Silicon Valley is losing its mojo or anything. It's because California is known famously as a very expensive place to do business. I don't know
Well,
how
the
it changes,
highest
but
corporate taxes in the country, right?
that's one thing. Yeah, absolutely. And, people will say, oh, it's humid, it's hot in Texas, whatever. If there's money to be saved, a company is going to save it. We've seen Apple do its tax thing in Dublin, Ireland, for whatever reason. It's money. And so, yeah, California is at risk of that. And that puts everything, at risk for a state and for our valley that is really, it's got its identity on being the place you have to be.
Yeah, well, I think there's a hidden story in this, which is these are mature companies and they're having trouble recruiting talent. I mean, you're a really hotshot engineer coming out of MIT or Caltech or Stanford, and you're looking for, a bright future. Are you going to go to HP Enterprise? Are you going to go to Cisco, where they basically buy companies, bundle their technology, and never advance it any further beyond that? Just sell it to people. They got the cloud now, but I don't know. These aren't sexy companies anymore. I think that we've been living on their reputation, that we still see them in their glory days. But how much is Larry? Yeah.
Well, I was just going to say, and that's why Silicon Valley needs to stay known and remain known as a place where startups can come and do business. Because if we're just known for a few big, giant companies, they may stay, they may go, but what doesn't happen is the continuous growth of the valley. And that's what you need. And if the Facebooks and the Amazons of the world stifle that, Silicon Valley gets hurt.
Yes. Okay, well, let's talk about the sick man of Silicon Valley, Intel. Here was arguably the most important company on earth. And now, investors are saying, it's time to go. Is Intel the next one to move out? Do they move to near their fabs in Albuquerque or in, Oregon?
I don't know. I mean, they're, one of the absolute OGs of Silicon Valley. It would be much more shocking to see Intel go for me than it was to see, an HP spinoff or Oracle go. But they might, because there's money on the table. There's money to be saved elsewhere. And yeah, Intel is struggling. And certainly it would just be a symbolic move of putting some executives somewhere. Their fabs aren't here. The stuff isn't made here. So it would be a symbolic move. It would be a surprising move. But again, that isn't going to determine the success of Silicon Valley.
Right. And I think we romanticize these OG companies. I mean, Tandem's gone. Varian is a shadow. Does Varian even exist anymore? Fairchild's gone. National Semiconductor's all but gone. So, I mean, these legendary companies, well, maybe we build them nice memorials and move on.
Right. Look, if NVIDIA decided to move its headquarters and didn't build in Santa Clara but went to Austin, Texas, big alarm bells. But big alarm bells. Right.
Yeah.
That's huge. And that's a young, relatively sexy company in the chip world. And they decided to stay. And that was very, very important. Intel, if they can turn things around, they can save some jobs, but they're not going to be the future of Silicon Valley.
Yeah, and they're not going to turn it around for 5 years. It's going to take them that long. They're 2 generations behind now. How are they going to catch up? Oh, well, I'm glad I wrote the book when I did. Let's go on. IPOs. We had IPO of the new year, literally within like a day or two after New Year's Day. It's another one of these blank check outfits. It's Altimeter Capital they raised $450 million in October, and they raised money this week with another one of these SPACs. We call them SPACs or SPACs.
I've heard SPAC more than SPAC, but I mean, yeah, the acquisition company, that's the AC.
Sounds like something you put on wallpaper.
Right. It's SPACL.
Yeah.
I don't know. I mean, some of these make sense because it's a less expensive, smoother way to go public. And right. Have some of these companies that, hey, we save time, we save money, and business still gets done. And meanwhile, you're public and shareholders can own you. On the other hand, as we saw with companies like Nikola, it's a way for companies that probably shouldn't be public to go public, and eventually investors lose money. So it's almost too easy in some ways. But it's clearly the way that in 2021, we're going to see a lot of companies.
I mean, it's an incredible level of trust that's required, right? I mean, you're saying, well, they're doing, you can go in cheap. You can go in at $10 into one of these when it goes out. So you get a piece of the action, but they're not even telling you who they're going to put their money into. You're supposed to depend upon them. You know, there's an interesting alternative history of Silicon Valley, which is the way you make money and create new markets is to go one step removed from what already exists out there, one higher level of virtuality, let's say. So you have computers, and people will make a lot of money on computers, but then you have software, you have operating systems, one step removed into unreality. And then once you have that, then you come out with apps, and apps get you one more step removed. And the whole story of this town has been doing that for 50 years. And now we have venture capital, in a sense, doing that as well. That we virtualize that process. So now you give your $10 to, Altimeter, and they're not going to tell you who they're going to invest in. But when they get several $100 million, they're going to invest it somewhere, and they're smart guys. So you take a bet on them.
Yeah, but that even what you just said, it sort of breaks down the process. We were not able to give money to a VC to invest, at least most of us weren't. And, the idea was you have to wait till the whole machinery happened with the VCs and the banks, and then a company went public and you could become part owner.
Right.
Some of that has broken down now, so it makes it a little easy. Is it too easy? Ask a nickel a shareholder who bought it 50 or 60. Yeah, it's too easy. But on the other hand, some of these companies, and I think the newest trend is for some of these companies involved in climate change. We're seeing a lot of EV companies. We're seeing charge companies go public. And this means more money towards climate change, towards, the Valley becoming maybe sort of a center for environmental technology. And that's a good thing. How many of these companies will last? Who knows? But they have a better shot because they're getting some of that capital by going public.
Right, so cheaper entry, bigger possible downside return, but also you need a higher level of trust, and the risk is much greater.
Right, the risk is always
will go to. Doesn't that sound like Silicon Valley? I mean,
right.
Yeah, I mean,
it's a new way of doing it.
Yeah, exactly. Okay, various other things. Real estate still going crazy around here. Analysts are predicting that home prices are going to stay high in 2021. Now, that seems contrary to the stories of not being able to find a U-Haul trailer around here because everybody's moving out, companies leaving. We had one gentleman at, where was he? Twilio's CEO. He's calling for people to stay here, keep up the community. I mean, it sounds like a guy that's worried about the fate of the Valley. So we're hearing all of this. And then over here, people are buying houses with abandon, bidding them up over, even at these insane list prices, they're selling it for higher than list. And in real estate investors are buying up every open office building and shopping center in the Valley. What's going on?
Yeah. Well, so Jeff at Twilio is saying techies should stay, Larry Ellison stay. The housing thing is different. There are not many houses out there right now, but there is money because some of these IPOs are coming due and people are getting cash in their pocket. Yeah. So that's tech. Tech still has a lot of money and there's a shortage of houses because of the pandemic. That's probably going to last through 2021 until we get a normal real estate market. So if you're putting your house on the market and you're willing to let people walk through and do all that, you're probably going to get top dollar because of the shortage. But the rent thing is where people are moving out because those jobs have gone away. The housing market is very artificial right now. It's still high, but there's a scarcity because not many people are saying, hey, let's get a bunch of strangers into our home right now. Ideally, we're doing the opposite and we're sort of sheltering in place.
Okay, so we have a new administration. I'll go all the way back to the beginning now. We have a new administration in. Republicans are known for focus on economics, less interested in social issues. Democrats, more interested in social issues, less interested in economic vitality. What do you think that means for the next few years in terms of the Valley and the health of the economy?
I mean, I think the health of the economy is going to depend largely on the tech jobs. And if they, as they did, you know, we thought that the tech industry might take a hit with the whole work from home thing because we've never done it. And it turns out these companies are worth more than ever. And entire new industries have bloomed, not just software and storage, but Peloton, is this huge successful company because of the indoor Zoom, we're on it right now. I think as long as those jobs stay around, that will keep housing high, that will keep the tax base strong. But that's just this area. California still has a lot of people that are jobless. Obviously the country does. That doesn't turn around, I don't think, anytime soon.
Speaking of Zoom, before we run out of time, speaking of Zoom, I reconnected with an old friend, Gary Chesnudis, and he's working now at Zoom. And I said, what's it like there? And he said, it's HP 2.0. I've spent, 30 years trying to find HP again. And I thought, well, that's not quite correct. Tandem was probably HP 2.0. But Zoom may be HP 3.0. He says that the work atmosphere there, everyone's happy. Of course, when you've got one of the hottest companies on earth, it's usually pretty happy times. But it kind of gives you hope that there are still companies out there that are trying to create that kind of trusting work environment that HP was famous for, and we've lost an awful lot of. So on that positive note, as we go into the chaos of, the next few weeks, hang in. Welcome back to Field Reporting. I'm glad you're out of the chair. And that's it for now, folks. You can find us on the Silicon Valley Business Journal homepage, as well as on Spotify, Anchor, Google Podcast, Apple Podcast, and YouTube. Stay safe and have a great weekend, and welcome to the new year. Happy 2021. Let's hope it's an improvement over 2020, though it hasn't been so far. Bye-bye.